Hey folks, David Frost, LazyGapTrader.com. In this video, we're going to be talking about gap trading. Gap trading is by far the single best day trading strategy available across the markets today. I have a course where I teach two specific gap trading strategies. One is the morning gap trades. We're going to be talking about a couple of morning gap trades in this video. The second is gap fill trades. It's another gap trading strategy where I teach traders how to identify the specific stocks where this works the best and how to know when a stock is going to come back, fill a gap, and have a price reaction in the other direction. When the stock has a price reaction in the other direction, that's where we can make money, knowing that's the highest probability scenario that's going to take place. That's the gap fill strategy. Now back to the morning gaps. What I do is, in addition to the course, I have a service where I provide members my specific gap trades each and every day. I send it out about 9 a.m. in the morning, long before the market opens. I even offer this service on a 2-week trial so that you can see the accuracy and the power of the price levels that I'm going to show you now. So on the morning gap trades, I teach you how to identify the specific stocks this works the best for, what to look for and the characteristics of the stocks, and then I teach you how to calculate the precise level where a stock is most likely or has the highest probability to have a reaction in the other direction, meaning a stock will find support on the downside or resistance on the upside and have a price reaction trading in the other direction. So let's look specifically what I mean by that. First, let's take a look at the email that went out this morning to members at 9 a.m. So here we had 4 potential gap trades for the day: Tiffany, Hewlett-Packard Enterprise, Alibaba, and Deutsche Bank. One of them hit its level and had a price reaction in the other direction, and we made money on it. Tiffany didn't come close. It was a no trade. We just never hit the level. When a stock doesn't hit the level, it's off the list. It's a no trade. Hewlett-Packard Enterprises missed its level by 5 cents. So it's a no trade, but I'm going to show it to you anyway because it shows the power of how precise these levels are. Sometimes we miss by a few pennies, but many times we hit them spot on and are able to make money. And I'm going to show you that in Alibaba because we were able to make money this morning in Alibaba, so we're going to take a look at that trade. And Deutsche Bank didn't hit its level, so it's a no trade. So first, let's take a look at Alibaba. You can see from the email I specify it's a gap lower, meaning it was gapping down at the open. It had a support level of $77.42. I specify the stop and profit target is about 60 to 70 cents. So let's take a look at what happened to Alibaba today. So here's a daily chart of Alibaba, and you can see the $77.42 number running across the screen represented by this purple trend line. But in order to get the full effect of what happened this morning when the stock was down at the open, let's go down to a shorter time frame and take a look specifically at what happened. Now, some traders even got 2 bites at the Alibaba apple today. I don't necessarily recommend that. However, traders obviously do what they choose to do, and this provided 2 trades today. But I'm going to show you the trade I took first, and here's a 1-minute chart. So Alibaba opens from the prior day's close up here. It opens down, and it begins to come in to the $77.42 level. It pierces through by a little bit, makes a doji candle, and trades higher. And just 1, 2, 3, 4 minutes after, or 5 minutes after hitting the $77.42 number, Alibaba makes a high of $77.98. Now that represents a gain of 56 cents in just a few minutes. Now I specified the stop and profit target at 60 to 70 cents, but it's an about number. So we got the bounce we were looking for, and traders, and I teach in my course, traders will generally put a trailing stop in, put a break-even stop in, take half off the table. I teach you how to turn these trades into a risk-free trade where sometimes the stock will just take off on you and you're able to get much more than a 56-cent gain out of it. But let's take a look at another time frame and look what happened to Alibaba, because there's a method to the madness and a reason why I want to show you another time frame. Now here's a 5-minute chart. And as you can see, when Alibaba came into this level, It traded in and around this level for about 10 minutes, maybe 15 minutes, the 77.42, give or take. It shows you the importance of this level. That's what I really wanted to display, is how precise and important these levels are that I teach traders how to get for themselves in my course. And you can see what happened. In about an hour, Alibaba was trading up at a high of $78.70. So that represents almost a $1.30 maximum gain, but this was a double dip. So a lot of traders wouldn't have traded it twice, and certainly wouldn't have traded, and I wouldn't recommend trading it after it bounced up the first time. But the point I wanted to make, and what I wanted to show you, is how important that $77.42 level is. And in my course, I teach traders precisely how to calculate these levels and do this for yourself. Gap trading is by far the single best day trading strategy, at least the way I teach it anyway. And then real quick, we wanted to take a look at Hewlett-Packard Enterprises and see how close we came to that level today. Again, showing the importance of how precise these levels are, even though it missed by a couple of pennies. Remember the email, Hewlett-Packard, the price level where a resistance point would be. Here's the email again, Hewlett-Packard, gap higher, resistance levels will be a double top at $18.55. Now here's a daily chart of Hewlett-Packard, and as you can see, today's high came in at $18.50, only 5 cents away from the purple trend line that represents $18.55. It was a no trade, but once again, just to display the importance of the price levels I teach you how to get in my course at lazygaptrader.com. Folks, you have to come over, check out the course, lazygaptrader.com. It's a life-changing opportunity where you can learn how to get specific price levels where stocks will trade in the other direction, allowing you to pocket profits along the way. I teach 2 specific gap trading strategies. I want you to come over, check out lazygaptrader.com. I'm David Frost. Thanks for tuning in, folks.